Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, December 10th at about 3:30 p.m. Eastern. Well, U.S. consumer prices rose further in November amid strong gains in the cost of food and other goods. Boy, I've noticed that, leading to the largest annual increase in more than 39 years and potentially giving the Federal Reserve ammunition to quickly wind down its bond purchases. The report from the Labor Department today followed on the heels of a slew of data this month showing a rapidly tightening labor market, with supply bottlenecks showing little sign of easing and companies raising wages as they compete for scarce workers. High inflation could indeed persist into 2022. On that note, cheerful or not, we will go on and look at three charts that could give us some insight into the week to come. Our first chart is a daily chart of the S&P 500 SPDR, symbol SPY. We keep an eye on the SPY. Of course, this is the ETF that follows our benchmark S&P 500 index. And we watch it because as traders, we want to know the mood and manner of the entire market, or I should say the benchmark at least, while we are trading. We want to know if it's in an uptrend, downtrend, or moving sideways. Right now, of course, and as it has been for quite a while, the S&P 500 is in an uptrend. Fingers crossed it stays that way. Now, the SPY's last all-time closing high was back here in on November 18th at $469.73. Now, this afternoon when I captured this chart, the SPY was trading at $469.53. That is just, of course, within touching distance of these all-time or this prior all-time high back here a couple, 3 weeks ago. So you know here, and you can see that after that all-time high, the SPY fell down, and it fell down to about $450 here, just below one day the 50-day moving average, the green line you see on the scene. Thankfully rising up the second day, that green candle you see. So it held 450 here, and then it gradually started rallying here, which is a good thing, a bullish thing, and moved back up again to where it is right now at 469.53. So this is a very important place right here, because right here we see, is this going to form a resistance point here of 470 that the SPY cannot get over, and that would be about 4,700 on the S&P 500 itself? Is it going to form a high here that the S&P cannot get over? In other words, our buyers saying, nope, we're not paying any more for this thing right now. That is what we want to keep an eye on here. So we do see resistance here again at 470, 471. We know it moved down here to support at 450. And we use the 50-day moving average, which can be a key, almost trend line here. And we want to see if the SPY can remain over the 50-day, because that's a very healthy thing if it can. And if it cannot, then it means weakness is coming into the broad market. So we do again have supported now the green line, the 50 days at 456. That could be potential support if the SPY pulls back. We do have that support at 450. We do have more potential support here. Write it down at 426, and now that is coming in. That key support level is coming in with the 200-day, the black line, the 200-day moving average, and that means that this could be, hopefully we don't need it, but it could be extra strong because we are getting price support and indicator support, at least at the moment, coming in at to make it stronger. Of course, we don't right now. Of course, we're far enough away from it that will change. So we do want to see here in the coming week, mainly, can the SPY stay above the 50-day moving average? At least can it stay above 450? That's key support right now. Is that going to happen? Now, in order for this uptrend we are in to continue to be an uptrend, we need a higher high or at least a higher low if it pulls back. So keep an eye on the 50-day moving average as we move deeper into the holiday season. And certainly keep an eye on this 450 potential support line on the SPY. Our second chart today will be, as it always is, a daily chart of the Invesco QQQ, symbol QQQ. As you all know, this represents the NASDAQ 100, a major index in the market. Of course, top holdings include Apple, Amazon, Microsoft, Alphabet, Facebook, that whole group. Now, the QQQ made its last all-time closing high back here on November 19th at $403.99. We can call it 404 if we want. Now, today when I captured this chart, the QQQ was trading at $397.06. Just like the SPY, it's within kissing distance of its prior all-time high. Now, last week we talked about here, was this going to be a very small, granted, but was it going to be a little kind of head and shoulders pattern, which is a top reversal pattern? Was it going to work out like that? And it did fall below any kind of a neckline we can kind of construct here. It's very, very shallow if it is. And as I explained, sometimes head and shoulder patterns can actually be continuation patterns. They don't have to be the dreaded top reversal pattern that sometimes they turn into as well. So you don't know. It did play out here a tiny bit. The Qs fell down, came back up, and then fell below the red line, the 20-day moving average. They fell, or I should say it fell down to down here to the 50-day moving average, and it fell down here to about 380, held there like the SPY's just above, thank you, from our lips to God's ears, just above the 50-day moving average, keeping it pretty healthy here. So it did gap back up. Today, it's riding along pretty nicely, again, at 397.06. So with the Qs, we do have to pay attention here. Now we see that there is short-term resistance here. We can draw a line all the way across here. So we have short-term resistance at 400. Of course, we have it up here at 404 where the intraday high was. We have supported the 50-day down at 380, 384, 380 or 384. And just like the SPY, right now, I know this is a lot of stuff on this chart, but we do want the QQQ through the holiday season to stay healthy, to stay above the 50-day moving average at 383, 384. We also have a trend line, a short-term trend line coming in here at the same place. So that makes this 380 zone a very important place for the QQQ to pay attention to. Our final chart today is one we haven't looked at in a long time, and it's a little different than what we usually do. I've looked through a tremendous amount of charts today for different industry groups, and I'm not seeing anything at the moment that is too exciting, but then again, the stock market might get real exciting in the next few weeks. So maybe we want to keep a little more quiet and keep our money in a little less exciting arena here. So I looked at the IYZ today. I know that AT&T, which is a major component of it, has moved down for quite a while, and it may be getting ready here to slow down its fall. So we're looking at a daily chart of the iShares U.S. Telecommunications ETF, symbol IYZ. It does have 21 holdings. Top holdings include Cisco, Comcast, Verizon, Sienna, and of course AT&T. So when we look at this, I'll start out by telling you, and you can't see it on this chart, The IYZ made a all-time closing high, and you can't see it on this chart, in January of 2017 at $36.74. Now, just thinking about this, if you did look at a long-term chart of the IYZ, say a monthly chart, you would note that the IYZ does have support, has many times over, has shown support at the $30, $31 level, price level. So I do see long-term support there. Whenever I get into a stock, whenever I go long, and I'm going to hold it for more than, or I at least plan to hold it for more than a few days, I always go back and look at a long-term chart to see what's really happened over the last actually few years. That way you can get a real picture of the stock's personality. So I see this strong support zone with the IYZ, again, around the 30-31 zone. Now, if we come back to this chart here, we see that a recent high in September had the IYZ. A recent high in September had the IYZ up to $35. Then from there it started to move down ever since the end of August, 1st of September. It started to move down in a downtrend. Tried to come up here in November and jump back over the 50-day, couldn't do it, then fell pretty hard here down to its lows here at about $30.25 here. When I captured this chart today, the IYZ was trading at $31.56, so it did jump here. Now this, I'm going to consider this a bottom fishing play. It's not a low bottom, but for the IYZ, it is, and again, this is a defensive play. It is also a bottom fishing play, at least in the short term. So I am looking here at the IYZ, and I'm thinking that if in the coming week, and you see right now it's trading at $31.56, in the coming week, if the IYZ can stay, if the market's positive, the broad market, the SPY is positive, and if the IYZ can stay above 31, I will add a small position to my portfolio. Now it's going to be small because I know that it has resistance. I think it can probably easily get through the 20-day moving average, but it does have resistance here. If the broad market goes higher, I think it can. I know it has resistance here at the 50-day, potential resistance at the trend line. So we've got about $32, about $32.30 or 50. Then we have the 200-day moving average here. Now, if it gets back up to the 200-day moving average, this line is currently going horizontal. When a moving average goes horizontal, it usually does not pose as much resistance as it does when it's heading down overhead, like the 50-day is coming down overhead now. So if the IYZ can remain above 31 in the coming week, I will add a very small position to my portfolio. My initial stop is going to be down here at $29.80. Now, when and if the IYZ rises to above the 200-day moving average, so if it rises above 33, I will add I'll add another small position to the position, and of course by then I will have a trailing stop. So I know this is defensive. I think that's probably a better place to be right now, at least with some of our cash, and I would look forward to holding this for a longer period than most trades, as long as it behaves and stays above my initial stop at $29.80. So you may want to keep an eye on the IYZ in the coming week. Finally, please know this is the perfect time to check out my online training programs. These programs include our online flagship training, 7 Steps to Successful Trading. We also have How to Swing Trade Successfully. That's one of the most popular programs. How to Trend the Trade to Profits, 3 Winning Setups, bottom fishing, and more. These programs can help you increase your gains quickly and easily. I think they're fun to learn, and they can really be of benefit to your trading. To see all of my online training programs, simply go to the link on this screen right here. See the link? Or simply click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.